Let's talk about what's going on in the stock market right now. The Nasdaq is taking a beating, and it's not just a one-time drop. There was a big dip recently, and now it's continuing to slide. But why is this happening? What's driving the market down? Let's break it all down in a way that actually makes sense. The biggest reason for today's drop? The latest Consumer Confidence Index from the Conference Board. This index tells us how consumers feel about the economy, whether they're optimistic and likely to spend money, or if they're worried and likely to cut back. The expected number was 102.7, but the actual result? 98.3. That's a big miss. And it's not just a one-time dip. This is the third straight month of declines, and it's the biggest drop since August 2021. That's a red flag for the economy. Digging deeper into the numbers, people are more worried about job security than they've been in the past 10 years. On top of that, their expectations for inflation over the next 12 months have jumped. When people start worrying about jobs and inflation, they spend less. And when spending slows down, companies make less money. That's why the stock market is reacting the way it is. Now, let's talk about what's happening in the bond market. The U.S. 10-year Treasury yield has been dropping fast. Why does this matter? When investors start pouring money into government bonds, it usually means one thing. They're looking for safety. It's a clear sign that people are worried about risk and want to protect their money instead of taking chances in the stock market. Some are even bringing up the dreaded stagflation, a mix of slow growth, high inflation, and high unemployment. That's one of the worst-case scenarios for an economy. On top of that, Trump is making headlines again, threatening to push more tariffs on Mexico and Canada. That uncertainty is making investors even more nervous, adding fuel to the fire. The drop in the Nasdaq means tech stocks are struggling, and Tesla is getting hit hard. Tesla's sales in Europe fell 45% year over year, and in Germany, one of its biggest markets, sales dropped 60%. Why? A mix of factors. New models are coming, so people are holding off on buying, and Elon Musk's political statements might not be helping either. Meanwhile, Nvidia is down over 2%, but there's some good news in the AI space. Chinese tech giants like Tencent, Alibaba, and ByteDance are ordering tons of Nvidia's new AI chips. That demand could help support Nvidia in the long run, but short term, the market uncertainty is dragging everything down. The next big moment for the market? Nvidia's earnings report. Nvidia has been the star of the AI boom, and its stock has been a major force behind the Nasdaq's gains. If the earnings report is strong, it might calm the market a bit. But if Nvidia disappoints, expect even more volatility. Right now, the market isn't crashing because of a single event. It's a mix of bad economic data, investor fears, and uncertainty about what's coming next. The stock market is full of ups and downs, and right now, we're in one of those rough patches. But understanding what's actually happening, why people are worried, what's driving the drop, makes it easier to see where things might be heading. If this video helped make sense of the chaos, hit that like button, subscribe, and stay tuned for more updates.